Right now, let's take a look at the global market space. We are joined in Cape Town by Graham Bell, strategist at Old Mutual Investment Group Equities. Graham, let's start by looking at the Bank of England. We've just had their minutes coming out today, and two of the central bankers who are part of that meeting actually wanted to have a rate hike in the UK. What does that tell us going forward as far as the UK's rate decision is concerned?
Yes, well, it was a bit of a surprise, the 7-2 split. I think a lot of people thought it would still be unanimous 9-0 against any rate hike. But as you know, for several months now, there's been speculation that the UK would have a rate hike. Bank of England's been moving in that direction. There's been a lot of data coming out that's been strong in the UK. But against that, yesterday's inflation number was well down. The CPI rate fell from 1.9 to 1.6, so it resumed the downtrend that has been in place for some time. And also we've seen very weak wage growth in the UK. So although unemployment has been coming down and jobs have been picking up, wage rates have not been picking up. And so there's no real reason at this stage for the Bank of England to get more aggressive. The two who voted for the hike, Martin Wheel and Ian McCafferty, are both known hawks, so they're on the hawkish side of the panel, and their call is justified. It's a justified call for them to state their position, but I don't think it really changes my view, which I've had for several of these conversations that we've had for the last few months, and that is that the Bank of England will probably only hike in the first quarter of next year, but it will be the first of the major central banks to begin hiking.
Somewhere else where central bank members are meeting is the Jackson Hole meeting taking place in the US. I take it the big focus there will be interest rates and inflation once again. Or are you expecting any surprise announcements to be made at the end of this week?
Well, yeah, Jackson Hole, Wyoming is not just central bankers, of course, it's a wide range of people and influential decision makers. Janet Yellen will be talking on Friday, I believe. I don't think that she's going to say that much about monetary policy, but if she does, I think she will reiterate what she's been saying for some time, and that is that the main concerns are that long-term unemployment rates in the US remain very high. They've been coming down, but they're still historically high. And there are a lot of people who are employed only part-time who would prefer to have full-time employment. And that's her main issue. The other thing is that US inflation has been ticking up, but yesterday's number showed it turning back down again. And I think the next couple of months we will see further progression in that downward direction, because the oil price has come down quite a bit from the spike we saw a few months back, and food prices have been coming down pretty sharply as well. So the inflationary pressure on the inflationary need for a hike in the USA is actually receding again. So pretty dovish outlook, I think, for monetary policy in the US, and I think if that does come through, that's what we'll see in Jackson Hole.
What can investors be looking out for as far as the Fed minutes that will be released at 8 p.m. this evening?
Well, the Fed, I haven't really thought about that too much. I'm not spending that too much time looking at the Fed minutes. The Fed minutes are kind of backward looking, and unless there's a significant change in attitude or change in voting patterns, I don't think I think it'll be a non-event. I don't really follow it that closely. I think though that the overall picture is for central bankers in the US and in the UK and certainly in Europe to still be in pretty relaxed mode. They want to keep it easy, they want to keep the rates low. The first hike maybe in the UK next year, first quarter next year, US only in the middle of the year. Remember that rates are still extremely low and are likely to remain low even when they start to rise. Equity markets have pulled back quite sharply in recent weeks. Some of it's been based on geopolitical concerns, some of which are now receding. So I think this is a good scope now for equities to bounce back up again.
Maybe a good time to get into the global market space if you're not in there already. Graham Bell, thank you so much for your time today. That was Graham Bell. He's a strategist at Old Mutual Investment Group under Equities.